probably haven't heard about this, the SpaceX IPO. Everyone's talking about it this week. It's one big colossal failure of common sense in terms of where we are in history. The S&P 500 is already nearly 50% technology. And now we're adding even more artificial intelligence and more AI into the picture, even more technology. History's proven us over and over again, whether it be the financials in 2007, the oil names in 2010, 14, when one sector gets too big in the market, it has a colossal impact on your 401k. In our latest book, we talk about the dark side of passive investing. Why does that matter? Why is that important to you? Everyone's 401k is at stake because the percentage of your wealth that's in your 401k is overdosing on artificial intelligence and technology at a time when that sector and those sectors are the most expensive in history. How big is this SpaceX IPO? When Microsoft came public, way back when in the 80s, it was less than $1 billion. When Facebook came public, it was $100 billion. Tesla came public years ago, 2010, 2012, 13 in that area. Tesla was only $2 billion. SpaceX is coming public at close to 1,800 billion or $1.8 trillion. So what's happening? And this is the dark side of passive investing. Everyone's 401k, the NASDAQ and the S&P 500 over the next year are going to be force-fed this colossal amount of stocks, whether it be SpaceX, OpenAI, Anthropic, all these new companies in the AI space as well as the space space. It's too much at one time, and relative to history in terms of where other IPOs are priced. You can't have companies coming public at $1.8 trillion when they should have come public 10 years. Even in 2019, SpaceX was only worth 30 billion in 2019 to 1.8 trillion today. So companies like SpaceX in the private realm, the billionaires, the venture capital crowd, they're monetizing and dumping their stakes to the public right into your 401k. Companies are staying private way, way too long. Companies are staying private way too long in the maturity cycle of the company's life cycle. And that's what's creating a massive distortion. And that's part of the dark side of passive investing. Again, why is the SpaceX IPO so important to you as an investor? Think of the S&P 500, almost 50% technology as it is. And think of the sales of SpaceX. Goldman Sachs and Morgan Stanley tell us that over the next 4 or 5 years, SpaceX is going to generate around $1.3 trillion of revenue over the next 5 years. Think about that. Where's that revenue coming from? Where's that revenue coming from? Guess where it's coming from? Think of the Mag 7, the Googles, the Microsofts, the Amazons. So in other words, over the next 5 years, we have 5.4 of capital 5.4 trillion of capital investment in artificial intelligence data centers around the United States. Now, according to Wall Street, SpaceX is going to generate another 1.3 trillion of revenues. And that is essentially a rail system from Earth up to space through data centers in space. That's one aspect of their very, very important aspect of their business model. So think about it. At the end of the day, SpaceX 1.3, 1.4 trillion of assumed revenues over the next 5 years. That money is coming from raiding the free cash flow of all the big technology companies in the United States. The Googles, the Microsofts, the Amazons, the Metas, okay? So In order for SpaceX to achieve that 1.3, $1.4 trillion of revenue in the next 4 or 5 years, the only way that's really going to be accomplished is if SpaceX drains the free cash flow and the revenues and the profits of the big technology companies, which are a huge part of your 401k right now. Why should you care about the SpaceX IPO? Why? Well, think about it. If SpaceX had gone public in 2019, once again, $30 billion valuation. Today, 1.8 trillion. Facebook came public at 100 billion. 100 billion. This deal is almost 14 times that. Once again, companies are going public much later in their life cycle, and passive investors in index funds like the S&P 500, like the NASDAQ, like the Russell 2000, they're being force-fed high valuation equities at really amazing time in the market where there's absolute saturation of technology stocks in the indexes. Historically, let's think about who's dumping stock. Elon Musk and the venture capital crowd, they're dumping stock this week. You've got Google dumping $80 billion of stock this week, selling $80 billion. And so if you add it up, it's just Google and SpaceX. It's about $150 billion worth of stock. The biggest IPO ever in the history of markets was Saudi Aramco at 25 billion. Think about that. 25 billion. Once again, why does this matter to you? At turning points in markets, historically, when you get this kind of hubris, it's often a signal of massive, massive concentration of risk and concentration of wealth in one area. And that's what puts us all at risk. Why are big transactions like SpaceX often a turning point in markets? Historically, think of the big deals. RGR Nabisco, AOL Time Warner, TXU. It's that hubris in the market, that kind of overindulgence that creates those turning points. JP Morgan, 1907, one of my favorite quotes. There's nothing in this world which will so violently distort a man's judgment more than the sight of his neighbor getting rich. Always remember the lockups. It's the most important thing for investors watching us right now. What that means is the insiders and people that are cashing out, people that are dumping shares, they're only dumping right now $75 billion worth of stock in SpaceX. But over the next year, it's going to be a lot more, 3 to 4 times more. And that stock's going to go into the S&P 500 in the next year and a half, and it's in the NASDAQ. And so if you think about insiders dumping, institutional investors or venture capitalists dumping, they're dumping this stock into the market at a really historic valuation. When Facebook went public in 2012, like I said before, it was only about 100 billion. But the lockup is when more stock can be sold. And so the way IPOs work is there's an initial public offering, and then over the next year, more stock gets unlocked, and that more stock and more stock and more stock gets dumped into the market. And historically, what we've seen is companies have come public at higher and higher and higher valuations. Those lockups crush shares. I think you're far better off waiting for the dump. Once again, Facebook came public 2012. The stock dropped 50, 60% as the lockup dumped even more stock onto the market over the next year. So you have the IPO, and then the lockup unwinds, where venture capitalists, billionaires, insiders can dump and dump and dump even more stock. But above all, the SpaceX IPO has one of the most aggressive unwinds of their lockup of any deal we've ever seen. Let's think about the SpaceX IPO and the taxpayer and electricity bills, where's the energy going to come from for artificial intelligence? Once again, the street is expected to spend $5.4 trillion over the next 5 years on artificial intelligence data centers and another 1.3 trillion on space and SpaceX. Those capital expenditures are absurd historically. And what are they doing at the end of the day? Where's the power going to come from? What about the US power grid that needs a $2 trillion rebuild? What about your electricity bill? If you build 1,000 data centers across the United States over the next 5 years, everyone's cost of copper, of electricity, of nuclear power, everything goes up. This is a colossal failure of common sense. I think it's going to trigger potentially one of the next big financial crises. And above all, think about that $5.4 trillion of capital investment that's coming from the Metas, the Amazons, the Googles, your 401k. And think about what that's going to do over the next 5 years to those companies and that kind of investment. But above all, if you have data centers around the United States and all of a sudden you're going to have data centers in space that SpaceX is going to build and that railroad up into the stratosphere, now all of a sudden, at some point, some of these data centers on Earth will be potentially, this capital investment on Earth might be redirected to space. These are the things no one's talking about. And one thing about Wall Street analysts, they're in silos, right? So the investment bankers at Goldman Sachs and Morgan Stanley, they want to talk about SpaceX in terms of revenues because they want to justify that $1.8 trillion valuation. But the assumed revenues over the next 5 years that justify that valuation of 1.8 trillion, those assumed revenues raid the free cash flow of the big tech companies here in the United States. And if data centers get redirected from Earth to space, which would benefit SpaceX dramatically. Think about that. What about all the financing and all the banking deals and all the financing for data center construction in the United States? If there's redirection, once again, that creates a potential credit crisis in the United States. Stay tuned. Info@thebeartrapsreport.com.